Welcome back to the channel. Crypto Trend Trader here, and today we're going to be taking a look at Bitcoin. But before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So here we have the Coinbase chart, Bitcoin, and as you'll see, we were basically consolidating off that head and shoulders move in a upward ascending channel basically, and we had gotten 2 touches on the bottom and then 2 on top here. And we had talked about how we thought this was essentially wave 1, and then we had come down for 2, and then that we didn't think this was going to be the third wave because it was already shorter than the first wave, and typically the third wave is often the longest, but it's never the shortest. So although it's possible that this could have been the third wave and then we come down for a 4, up for 5, and then we sell off, I did find it very unlikely that the 3 wave would be shorter than the 1 wave, because typically in cryptocurrency it works the other way around. The 1 wave will be the shortest, the 3 will be the longest, and then the 5 will be somewhere in between, or even the 5 will be the longest if you get like a truncated wave 5. But typically you don't see it the other way around unless it's a wave like failure or pattern failure, impulse failure, whatever you want to call it. So in this case it looked a lot more like basically, you'll see it's very busy, the chart is right now, but there's a lot going on. We essentially came from our swing low here up to the 1, sold off after we topped out and formed the 1 here, okay, sold off back down to the 618, and then from the 618 we were able to get, you know, our swing and continue moving to the upside. And then from there on, there's 2 ways you could look at this. You could then pull Fibonacci from the 2 right here to the top right here and see how it corresponds, or you could pull it from the bottom right here to the 3 right here and see that corresponds much more realistically. Because if you would have pulled it, I'm going to throw one up here real quick. If you would have pulled it from right here and ran it to just the top right there, you would have seen that we only pulled back to the 382. As opposed to here we pulled back to the 618, and then if you count this entire wave from the 2 here to the 3 right here, you'll see we now pulled all the way back again exactly to the 618. And after we hit the 618, what did we do? We talk about this all the time. The typical behavior for this, whether it's going to be a reaction rally or it's going to be a trend reversal, but you almost always immediately come up 2 fib levels. So you're going to go from the 618 to the 0.5, and then from the 0.5 to the 382. And then what we like to do is see what the response is from that point. And now here you'll see we basically came down, hit the 618, started rallying, got the swing. The swing came up exactly to the 382, and then we got a massive sell-off. Huge rejection. And then from that rejection, you'll see we've now been rejected on the last 4 4-hour candles. So, you know, we're coming up on basically a day of getting rejected from this area at the 7300 range, which is crucial support, because if we lose the 7300 range, you know, we're right back to where we were at, putting the trend in jeopardy. And as you'll see here also, we had this long-term red ascending trend line resistance that was basically you know, acting as support after we had broken above it here. We came down, retested it, and started moving up. And then when we came down here, what I almost took a position actually off of the bottom of this channel right here in correspondence with the 618, the bottom of the channel, and then also you know, this trend line basically like breaking above it and then retesting it as support. But honestly, I just really didn't like how this panned out. I didn't like how this looked, and so I chose not to take that trade. You know, it's obviously on the longer time frame, any trade to the upside right now is essentially a reversal trade. You know, so they're going to be less reliable. You know, I'd rather look for like you know, pops up for an opportunity to short rather than you know, looking for an opportunity to long off of key support. And again, you know, it doesn't look good to me. It looks like we're going to continue to sell off here. We have another hour on this 4-hour, and as you'll see, like I said, we're just getting rejected continually. We are finding support right here at a couple key levels, but you know, on the broader scale of things, I mean, we're essentially just right back at the 618 of the green. I'm going to go to a longer time scale here, but obviously if you've been watching, you know, the channel for any amount of time, you're very familiar with you know, these trend lines and key support levels. But as you'll see, we have this this upward sloping trend line that's essentially been like the lows of the previous bear markets, and you know, we came down and touched below it. We didn't get a close outside of it, but we shot back up and found support, and now we're headed right back down. It looks like we're going to come down here and test it. I will probably take a trade off of the 886 at like 69.48, like 7,000 range, and you know, see if we can get a swing here and essentially like put in a higher low and potentially at least move back up to the top of the channel. But at this point in time, like, the situation doesn't look very promising. Just in general, you would expect that if we were going to find support, we would have found support by now, and I just don't think it's going to happen. Now, looking at the green Fibonacci, basically came all the way down from the 3,000 range up to the 14,000 range. We came all the way back down, found support the first time. We front ran the 618 and got that massive move back up, and look where the 618, we popped up from the 618 through the 0.5 exactly to the 382. We actually got a little bit of continuation with the wick above it, was probably FOMO coming in, and then we sold straight back off, and now here we are. We came down below the 618. So what I would expect to happen is once the 618 has failed, you know, we get that dead cat bounce or whatever, but the most likely target at this point in time is to come down here to the 786, which is going to put us in at the 5,400 range. So at this point in time, I think the most likely target is going to be 5,400 to the downside. And I think that as this trend continues to develop, it looks less and less likely that we're going to get our move to the upside. Although I still do see a possibility of coming as high as like the 85.27 range. But again, you know, I wouldn't count on it, and I think any moves to the upside should be used as an opportunity for shorting at this time, or unloading positions that you're underwater in. And as you can see, we do have continuation to the upside on our histogram for the TJD, TD, MACD, and as far as the Jewel Thief, both lines are strengthening to the upside as we sell off. So again, this looks like more of a consolidation pattern signature to me. You will notice the 4-hour Jewel Thief is pretty much calibrated for the 4-hour and the daily time frame. You can mess with settings if you like, but this is personally where I like to have it at. Again, this is not financial advice. I'm not your financial advisor, but you know, we did get the perfect sell signal on the Jewel. We basically got the distribution warning zone the whole way up here. We finally got that stab spring to the upside, and then right off of that spring, you know, we did get the hard sell signal. If you took that hard sell signal, it was basically about a 6% move to the downside, you know, and you wouldn't even been in a hurry to get out of that trade. You probably would still be in it now. We are, however, getting a accumulation signal, which again is going to be very much less reliable in this situation. What it looks more like to me is that we are finding finding support on the cross between the histogram and the blue slope line on the MACD. We typically will find some kind of support there, and then you know, get a little bit of a bounce and then sell back off. And I think that's what this was. That was that bounce and then rejection. And I think at this point in time we'll get continuation to the downside. We are getting the weekly close. I'm going to take off all this. We're getting the weekly close today, and again, just like we talked about, we basically had broke down from the support, came back up, tested it, got rejected, and now the wick is longer than the candle body, which to me looks very bearish. Assuming that we don't get a pushback up you know, in the next couple hours before this weekly candle close, what I would expect is continued sell-off, and I think it's very likely that we actually come all the way back down to the 6,900 region and see that strong rejection. And I think that honestly, you know, sentiment in the market is starting to switch over a little bit. You know, people are starting to realize that, you know, and this is my opinion, but people are starting to realize that, you know, the halvening is probably already factored in, and that, you know, there is no real fundamental analysis for this space, and that, you know, limiting supply is great and everything over time, but it's not necessarily going to create more demand. And as we see right now, you know, there isn't really that much demand in the market for this asset. It's continually selling off. So in all likelihood, like, if the demand isn't there, I don't see why limiting the supply is going to all of a sudden like shoot the price to the upside. I think over time it will. You know, obviously if crypto is successful, and I think it will be, and there's a future in it, I think definitely over time, you know, that will be a factor. But I think this whole idea of like, oh, the last 2 times there was a halvening, this happened, so now it's going to happen this time. I think that's all just like market psychology, and I think you're going to end up on the wrong side of the trade doing stuff like that. I mean, if you look at the Litecoin halvening a few months ago, everybody was saying the whole time that, you know, Litecoin is getting ready to go to the upside, getting ready to go to the upside. I mean, it topped out. I think I sold my last Litecoin at like $140 or something like that. Like, I couldn't believe people were buying at that price range over $100, like on the way down, thinking it was going to continue to the upside off of the halvening. Like, it doesn't make sense. I was buying Litecoin at like $30, so it had already gone up like 4 or 5x. So it seems very unlikely that after a huge move like that, that there would be a continued pump to the upside. It seems more likely that that pump was already front run, and then, you know, the demand is no longer there. And I think, again, that's the case with Bitcoin. You know, there's a lot of, like, you know, speculation, and people have all kinds of you know, theories on why exactly Bitcoin ran up on this rally, et cetera, et cetera, et cetera, and what the reason for. And I think more likely than not, probably what was happening is, you know, this is probably the halvening, you know, rally being priced in. I mean, it's very likely that, you know, this was an attempt either by, you know, whales to save this asset from a prolonged bear market, or that this was in fact an attempt at, you know, miners to offload their positions at a higher price prior to the halvening. I mean, anything like that could happen. At this point in time, it's all speculation. But the fact of the matter is more likely than not, the halvening is already priced in, and we're not going to see some like massive run to the upside anytime soon, at least not because of the halvening. You know, we could turn around tomorrow, and like I said, we could rally off this 618 fib and, you know, potentially move to new highs, and I wouldn't think twice about it. You know, looking back in hindsight, it's still very likely that we do rally from this area. But as far as, you know, trying to say that, you know, the fundamentals and the halvening and limiting supply and all this stuff is what's going to be like the catalyst, you know, for Bitcoin to all of a sudden rally to the upside, like, no, I don't think so. I don't see new money in this market. I don't see new people in the space. I don't see like hype. I don't see, you know, a new interest. It's just not there right now. And I think more likely than not, you know, what I was saying months ago is going to end up playing out, where we essentially go back down and retest the lows, and then, you know, basically just grind out months over time, and then eventually we can start moving to the upside. But, you know, the shakeout just, I'm not sure that it's complete. And, you know, this consolidation range, essentially, like, if we don't rally from where we're at right now, if we don't rally from this area and move to the upside, which is looking less and less likely, I mean, the next key support we have is going to be in this 5,900, 6,000 range. And assuming that that doesn't hold again, I mean, if it didn't hold last time, the likelihood that it's not going to hold this time, to me, it's very likely, you know, that we're going to retest. If we retest this area, I think it's very likely we're going to retest lower. Because if it didn't hold the first time, not that much has changed since then. So I don't see any reason it would hold this time. And we could potentially be headed back down, you know, to retest the lows, and could come in somewhere at like 3,400, or, you know, somewhere around there. Let me pull up the fibs real quick again. I think we have the 886 coming in right here. I mean, that would be, if we came down and touched a 786 in blue and the 886 in green at 4,300, I think that would be an absolutely phenomenal place for this market to swing back to the upside. Other than that, the next most likely place, you know, looking at this right now, based on Fibonacci, is probably that 5,500 range. But again, the big deciding factor on where this asset is headed, you know, we're not going to know for a long time, because we have to either take out the swing low or the swing high before we can get a full-on 100% confirm, you know, in either direction. And that's a long way away. You know, that's another over 50% to the downside, and that's another, you know, almost 300% to the upside. So we got plenty of time to make money on the inside ranges and trade and accumulate,